I'd like to welcome everyone tonight to the Hurley Investments Financial Services Commentary, being Tuesday the 23rd of 2018. And I've had two really good questions, but the first one is from Justin, and it comes in on what I want to talk with you about today. How are you doing in the market so far this year? And that's always, it's funny because everyone always asks, how good are you doing? And in all reality, I could tell you I'm at about a 3.35%. Oops, not a negative. I am at a 3.35%, but none, that's not true, but very few of my companies have reported. So pretty interesting that what I wanted to talk about was by now I usually have yearly goals written out, posted and concentrate on them daily. But I'm a little slow this year, and it really comes down to the next question that was asked, and that was, how are you going to protect? Let's make sure I get it right. What's the best way to play bearish just in case? So what is the best way to protect bearish just in case? And obviously I'm going to tell you that is to call or trade. But with the euphoria that we're in right now, what a ridiculous market. In fact, I even had someone ask me today, Kevin, maybe it was yesterday actually, I feel like I have to make sure I'm fully invested to not miss the run up. And I agree. The problem is, it's hard. It's really hard to invest at all-time highs. It's really hard to say, hey, everything's overvalued, so you know what? Even though the train has run bullish for 8 years, now it's time for me to jump in with both feet. And that usually comes down to the fact that when the retail investor just starts to get in, that's usually at the top. When you see the institutional that's in all the time has made all their money, and they're now selling off on those Fibonacci or Elliott waves to pull in a profit. So, well, Kevin, market's up like S&P's up 5% now. You're only at 3.35. Am I worried about it? I'm not. In fact, I can't even seem to set goals this year. I can't seem to set personal goals. I can't seem to set exercise goals or weight goals. I'm not setting goals right now for, things I want. Paying off debt was in the past, and that's all been done. But, I'm usually looking at another home to buy or a vehicle. I haven't set goals for accounts. In fact, most of my goals this year that I have started to think about and give serious consideration to are for other people, kind of what I'm looking to do for other people. And I'm finding it really interesting. Not only are we in what could be the best month in the market history, I'm finding out that personally, because things are so different and so out of whack, overstretched on valuations, I'm shocked at some of the times how the market goes up and up and up and up. I a little weary and don't understand because of some of the uncertainty. I haven't put myself in a position where I have decided, you know what, this year I want to do this. This year I want to do this. I haven't even set goals for the vacations or the thing my family typically does, other than one of them where we run out to Flaming Gorge for a week during 4th of July. I have so much uncertainty in my life as a person that it's affecting my job, my typical goals. It's affecting how I view the market, and it's really, this last week has been a reset for me. It's been a reset to say, okay, I can't be fearful, because we know what happens with fear, right? I can't be fearful of not making returns, so just blindly throw money into the market. I'm still trying to pick what I think are the best of the best, where I'm running valuation numbers on something like Visa. Out of curiosity, if you ran a valuation number on Visa, how high can Visa go? How high do you think Visa can go? I go to FinViz, right? Kind of ridiculous. I take the current PE based on next year's expected earnings. Oh, someone just wrote in there, someone obviously knew, whoever that ridiculously smart guy is. He just said 211. And it's funny because when you take a peek at it, when you take this and multiply it by that, man, one of you guys is fabulous. In fact, that looks like it's Keeve, my newest advisor that's building his company up. 4450 times 4.83. It's moved a little bit. It is actually now, wait, right, 214.93. Yesterday, I know it was 211 and change. So, personally, I'm doing some research. I'm looking at things, and this market has affected me to the point where it seems unrealistic to set yearly goals when there's so much euphoria in the market. As my job as an advisor to go through and not necessarily set the goals like I used to, which I've done all the way going back to 16 years old. So I'm 45. What's that? 29 years in some way, shape, or form. I've written up goals. I've posted them. They're spiritual goals, they're physical goals, they're personal goals, they're mental goals. Some years they're book goals on goals I want to read for books. Some years they're business or work goals that I want to test for my Series 7, 63, 65, 24, 2. I mean, there's a bunch of things I've done. I'm always one that holds myself accountable through goals of some type. Yet this year, the uncertainty in the market, Kevin, what uncertainty are you talking about? Well, maybe uncertainty is not the best word to use, but the euphoria that's in the market has made it extremely hard for me to put something down on paper that's something I feel I'm going to follow through with. And again, it's affected me to the point where personally, the goals that I have right now seem to be more for other people, where, hey, I want to make sure X person gets up to $4 or $5 million so that they've got enough money to provide for their family as a registered investment advisor. Hey, I want to make sure, my daughter gets her best opportunity to make the Junior Olympic gymnastics team for the nation this year. I've just got some unusual thoughts on goals that I seem to have for other people versus myself, and it's the first time it's come into this. Probably the Fed will trigger the reality check. Well, you know what, Abraham? I thought about that, and I've gone through it because obviously, what's the Fed trying to, well, actually, what's President Trump trying to do? I should say Trump and the Fed, right? Trump and the Fed want what? This obviously goes with the GOP as well. But what do Fed and the Trump want? Jobs. That is in the Fed's mandate, and Trump does want that, but I'm actually thinking of something different because the Fed doesn't necessarily have control over the job market. They do have, the unemployment rate, but not necessarily which doesn't make any sense because they don't have a whole lot there. But jobs would be one, but no, that's not it. They seem to want that weak dollar, right? They're going to inflate their way out of the borrowing that they've done. They definitely want to diminish liquidity. But they're not doing that, Abraham. In fact, they're doing just the opposite. We're printing up money until the cows come home. I can't believe how much money we're printing out there. The weak dollar is trying to inflate our way out of our debt. But Kevin, the Fed's raising the interest rate, three times this year. Our interest rate is still at historical lows. In fact, for a recession, if we were to have one, historically the Fed would like to see rates at between 4.5% and 5% so that they have firepower to stave off a recession. We don't have that right now. In fact, in all honesty, we're really far from it. So here the Fed, well, they've done so much raising of the rates, they really haven't. The Fed has not done a fabulous job of raising rates. They've had to obviously be very cautious because of their experiment that they're on right now. And in so doing, the key is to keep a weak dollar because that helps us with overseas. It helps us inflate our way out of the interest payments on our debt. The bad side is, though, you can weaken it to enough where it's going to cause inflation. And the longer we keep it weak, the bigger chance we'll get inflation, especially if it becomes so weak that you see a country like China start to flood the market with their dollars or their treasuries. Why is that important? Well, it's important because if we start to hit inflation, it means you'll see much higher interest rates for the treasuries that are out there. And this is all interconnected to commodity trading or trading of oil on the markets. So where I'm going at with all this comes down to this. My simple goal is to make money or add shares through protection while trading, let's switch that out, while investing other people's money. This year, I will most likely move to more long calls as profits are taken to be used for a stock substitute. Now, why might I be doing that? Give me a reason. Why do you think I might be doing that? Why would Hurley Investments be doing this? Justin, Josh, Keeve. Since Keeve knew one of the other answers, why might I be doing this? Think, why would you be getting called out of some stock positions? That's an interesting one. So, number one, pay lower taxes. And if I can add to it, Justin, right? Pay lower taxes than last year and pay them before they go up again. I would definitely buy that. I actually purposely moved out some leap covered calls just for that reason, to be able to do that. Keeve, limitless upside and limited downside. I can't say it any better than that. Limitless upside and limited downside. If I can add to that, because I'm taking some huge profits and I am at the point I want some cash available for any potential correction. And if you remember, a correction is that 20%, right? Pullback is 3 to 7. Correction is actually 10. No, correction is 20. Which one am I forgetting here? Pullback, something, correction. What's the middle one? Pullback 3 to 7. But short answer, I want some dry powder. And obviously, right, you can't get better returns, especially if less capital is being used / at risk. Now that does go with limited upside, limited downside, so I really should just put that back in there. Another comment, dividends are so low, ownership might not be so interesting and more efficient use of money. So Abraham, if I can credit you for that, dividend, and I'm going to put yields, are so low that stock ownership isn't as interesting and more efficient use of money, though requires more tight management. With that said, if someone was to ask me what I'm thinking about for trades or what I'm doing, how am I looking to trade? I now have long calls on Bank of America, Visa, and I want more stock ownership in Apple. So, Kevin, everyone already knows, right? Apple is going to repatriate some money. But what is in that repatriation that maybe some people might be missing, which would want someone like me to be in more Apple shares as we're going on here? What could be missing that would make someone want to invest more into Apple? Abraham, large dividend premium. Well, they're kind of small in their dividend, right? Dividends, you guys are close, but I want you to word that differently. What kind of dividend would I be looking for? Any idea? Could be a trend in our company, but I'm looking for that one-time dividend, right? What is that one-time dividend called? Anyone know? Not share buyback. I guess it is called a one-time. It's just called a one-time dividend. And there's a comment or an article that Apple could pay one-time dividend with only 160 billion of its cash on hand. And I wouldn't deplete it this much. But a one-time dividend with $160 billion could be $30 a share. Now, I don't think a special one-time dividend would be that big. But they now have over $300 billion. They bought back record amounts of shares. Could I see a $10 one-time special dividend to be used? Most definitely. Could they raise your dividend percentage to something like 4? Definitely. P ratio is still only at 19.27. Not caught up to the S&P 500. There's a lot that could be done with the money that they have. And it wouldn't surprise me to see maybe something boost them up with a one-time special dividend payout. money is so cheap right now. They're still bringing in 30, 40 billion free cash flow. Unbelievable. Unbelievable what they could do if they would choose to do that. All right. So let's get into the meat of today. What's happening this week and why? Haven't had very much earnings yet, economic reports. So it's earnings news. Drives the market for the time being. Any news that I could be forgetting? We did go through, obviously, the government shutdown. I will give them credit. Good job on going through it over the weekend and getting it back open by the close of business on Monday. Shame on the Democrats for caring more about the illegal immigrants, not immigrants, illegal immigrants, and ruining, although it is kind of funny to ruin Trump's anniversary. Kind of petty, but it is what it is. I don't know. I still like to see him, clean the swamp for all of them, plain and simple. But earnings will get us going. That's what's driving our markets. I'm still going to say higher. In fact, we could see the best month ever in the stock market history. The Dow, we're going beyond standard deviation ballistic. We are beyond the normal overbought condition. Again, almost to historical highs that we've never seen before. S&P looks just like it. Glad to see that the NASDAQ is trailing a little bit behind it, but really overbought and going to nosebleed levels. I broke down and said I've got 1 week left. We could see January end at a 4.0. More likely, we could see, if we had some good earnings going into next week and some pre-earnings runs, man, we could see a 6.5 1-month return on the S&P 500, which would just be historic. Earnings coming up, we have quite a bit today. Kinder Morgan, Johnson & Johnson, which did very good, Verizon, which missed, Capital Financial, UAL, United Airlines. We have tomorrow Abbott Labs, Comcast, General Electric, Grainger, SWK is Stanley Black & Decker, First Five, Discover Financial Services, Las Vegas Stands, Remax, Whirlpool. Whirlpool will probably be hit. No, Whirlpool will probably go higher. No, they won't, because they were the problem with the tariffs. We did have tariffs placed on primarily washing machines and one other item, but that would be something that would be good to say. Tariffs in place by executive order, and it was washing machines. And what was the other? Solar panels. There you go. Which is kind of funny. Watch out for those solar panels. I don't know. Production is basically done overseas anyway. Thursday, a big day. 3M. ALK, which I think is Alaska Airlines, American Airlines reports, JetBlue reports, so it's an airlines day. Northrop Grumman reports, Raytheon reports, Southwest reports, Intel reports, Terra Surgical, Starbucks, Honeywell should be there for Friday. As for economic reports, existing home sales, new home sales leading indicators will be relatively important for Wednesday, Thursday. The big one will be Friday if our GDP will stay above 3%. 2.9 is the expectation. Mark my words, watch it be 3.2. Watch GDP come in at 3.2. Kind of funny. Out of curiosity, if I could ask you guys another question in regards to GDP, what are the next big things that President Trump wants to get done? On his docket list, what is the next big thing that President Trump wants to get done? And there are a couple. There's not necessarily a right answer here. But what does he want to get done? Think about it. What's the next big thing on Trump's agenda that you could work under, you could go through, you could pre-invest in? Justin again, he wants to build a wall. If I can take that one step farther, there you go, Abraham. Infrastructure. There you go, David. Infrastructure. Not does he want to build a wall, he wants infrastructure. He wants to repair buildings and roads. He wants to upgrade the United States transportation system. He wants infrastructure. You know, that would probably go pretty well for it could go pretty well for a company like Caterpillar. U.S. Steel could benefit. I really think Freeport-McMoRan could get a jump here. There are some infrastructures could possibly help GE, but I wouldn't touch GE right now. But there are some infrastructure stocks that could get a benefit if he would push that through. So it'll be interesting to see what could happen in regards to that. So infrastructure it's going to be. Deere. It's funny, Abraham. I talked with Jeffrey about Deere. Deere is more for the foods, the grains, the farming, not necessarily for infrastructure, replace bridges, roads, and so forth. Technology infrastructure throughout the United States. Energy grid infrastructure. I wouldn't put Deere in that category. So no, Deere would not be my bet in that regard. Internationally, I have been spending less and less time where it seems like things are mattering. Things will matter international. We do have Japan that seems to have a couple. We do have the France, Germany PMI composite, but there's nothing. Well, with less volatility overseas, there's nothing overseas that I'm paying much attention to on a more regular basis like I used to. When we had the problems with China and problems with European Union and the pigs and all that, a lot of international economic reports mattered. It could sway markets during market hours. It definitely ruled our futures. We're not in that position, so I'm spending less time around market news. In fact, if anything right now, I'm really only spending time with the ECB announcements and China. That seems to be dragging my attention for what I would look at internationally. If we keep on going down, I found an interesting article, Investor Fear of Missing Out, which makes no sense why you'd run, you make your investment decisions on fear. I do have Kramer's 5 cardinal rules of engagement with bull markets. and really pretty interesting. It obviously reminds you to take a profit. You don't have to if you're collar trading. You can protect on the way down and add more shares. You do have to keep an eye out for that political canary in the coal mine, right? Don't be greedy. Don't fall in love, and stay diversified. I liked all of them. I can see things that are not necessarily correct in those, but you know what? The stay diversified, I'm over leveraged in the financials. It's the biggest opportunity going into next year. Don't fall in love. You know what? I'm sorry. I hate the cryptocurrencies and I love Apple right now. Don't be greedy. I'm going to be more greedy. I'm going to go more straight long calls, but I know how to protect. There are some things to be thinking about, and don't just blindly follow what someone says on TV. Apply it to yourself. I did put a little interesting item here on the bank executive buying back shares. I saw this one because Citigroup and Zions Bank each had two different members buying in, and those are banks that I currently invest in. And then I saw one more Kramer one here. I've never seen a market FOMO, fear of missing out. Again, we are looking at a possible historical market, which even Kramer, who's been in the market longer than I have, has never seen the market like it is right now. So with that said, questions. What questions do you guys have that I can answer? And I believe I missed one from Abraham up here. Abraham. I got the best way to play bearish. Good, but not sure how to do it with more ease. Collar trade. Oh, he asked, can you give example on yearly goals? So Abraham, I go across the board. So I'm going to use last year's. Last year's goals were I wanted to be 100% out of credit card debt. And not only were we able to do that, but we also got out of car debt, motorhome debt, boat debt, four-wheeler debt, and we did it all last year. So I'm nice to be 100% out of debt. Last year, I wanted to refinance the house, take advantage of a little bit lower rate, take some money out. Last year, I had the goal to hike down to Havasu Pie with my brothers. So I had those goals. I had the goal to do a cow last year. We did a cow last year. And when it's in regards to trading, I have more general goals. Again, I think you can hurt yourself sometimes by looking at ways that you can sit there and go, huh, I need a 20% return, and then you start taking more risk to get that. I think it's ridiculously foolish and stupid to be trading for a monthly income. It's too hard. It's like day trading. So again, my goals are kind of different now as I've gone out there and had to manage money and being so late in a bull market that yes, someone believes it could last for another 30 years, which but they're different and they're personal for each person. What new stocks are you watching for collar trades? New stocks that I am entering positions in are CarMax. Goldman Sachs is one. Bank of America straight long calls. I was looking at Ultra. I've also looking at Tapestry, which is the old Coach. Mosaic has been, oh, dang it, Hurley, come on. Mosaic has been one that I have been in as of recent. Keith, what other ones have I forgotten here? MO is Altria, correct. I am looking at Freeport McMoran and adding to positions. I do have soda. Nope, I got out of soda. I know. Why are you bullish on Goldman Sachs? I'm not necessarily. In fact, my order, if I was to get into stocks, are Bank of America, Zions Bank, Citigroup, and then Morgan Stanley. But Goldman Sachs, there it is. Thank you, Keeve. Goldman Sachs has room to run. Sprint and Wendy's are the other two that are kind of somewhat cheaper that I see some opportunity in. So my number one stocks, or the way that I'm going, really would still be for financials, Visa, Bank of America, Zions Bank, Citigroup, Morgan Stanley. That's where I've got my money, but really the bulk of it's in Visa that I just freed up like $1.6 million. We got called out. Bank of America, but then I got back in. I still have some positions. So believe it or not, I still had $1.6 million called away, and I still have over 600,000 in Visa. Plus, I just added 80, 90 some odd contracts. So we're going big into Visa. Bank of America is probably my biggest bank stock right now. Ridiculous amounts of Bank of America. I do have some leftover Zions Bank. I have some Citigroup, and I have some Morgan Stanley. And after Zions, Citigroup is relatively small, 2,500 shares. I think Morgan Stanley is only 2 accounts, so it's 1,000 shares each, 2,000 there. But again, why am I bullish on Goldman Sachs? Goldman Sachs seems to be the one that can have, well, let me show you. Let's just make it a little bit easier. What I see in Goldman Sachs are the moves that it seems to make. I like some bigger ranges. I like seeing a range between the 230 and 210. It was almost predictable. 220 up to 240, back down to 235. It just seems like it's making some jumps. And I would have been pretty okay with being in Goldman Sachs at 210, now trading at 260. That would have been a 25% return in less than a year. Opportunity along the way to pick up some shares, especially if we're making a couple drops at the same time. So it's not necessarily that Goldman Sachs is that appealing to me. I was just looking at it and where I would possibly put some new money. Is this a year for commodities to rise? I doubt it. I think if anything for commodities, it would be a year to see oil rise, but commodities as a whole, as well as metals, I would expect to see those possibly go down in price. Mark my words, if we see oil get to 70, I think it'll hit back down to 30, 35 before it's going to hit 75. At $70, it brings in everyone and their uncle again. So the fact we're at 64.90 something, I believe, is where oil closed today. If it hits 70, I think it could have a 35% or a 50% drop back down to 35 before it even got to 75. But no, I don't see the commodities moving, nor do I see the infusion of cash into commodities right now that would justify commodities going higher this year. Great question. Any other questions you guys have? All righty, here's a big one. This is back on Apple. I was reading an article about these one-time special dividends. Wouldn't we be better worried about Apple instead of paying off debt and growing the business more, giving more money to stock owners and dividends? Because they're so profitable right now. A one-time dividend is a good sign. Lots of companies doing well. Don't we want them to pay off debt? Okay, so the question comes down to, hey, are we more interested in Apple paying a one-time dividend to people or paying off their debt? So Apple is your anomaly. You don't worry about debt with Apple. Kevin, but they've got like $80 billion worth of debt that they've taken in. Yes, they have. And they've taken that debt in with 1%, 1.5% interest on it. And they did it in bonds that are callable that they can take it back anytime they want to. They actually were looking for cheap money. And Apple's not one to worry about for debt. If they spent the 160, they still would have 160 prior to this coming earnings on the 1st, after they've paid their taxes. So if they were to do a $30 dividend and use 160 million in of their 160 billion of their cash hoard, they'd still have 188 with 38 committed to taxes and another 10 committed to creating their new complex or whatever they're going to do. So the short answer is, with most companies, yes, you would more likely to see them pay off debt or have a cash-rich portfolio than you would seeing them pay a one-time special dividend. Emily, Apple is kind of the exception to the rule right now because of the cash hoard they have on hand. Emily, let me know if that answered your question. If not, I'll look at it again and give it another shot. Abraham, Apple will grow in the future. Its visualization noise. Correct. In fact, this is where you're probably going to see the services being that 16 to 18 billion instead of just 10 to 12. You could actually possibly see the services with the holidays be at $20 billion and have 95% of that be free cash flow to the company. You know what would really be amazing? If Apple could bring in a $50 billion free cash flow month on like a $90 billion of sales. It would be absolutely unbelievable, but it could be possible. Really, I'm in Apple more so for not what they did last quarter, not what they'll do for the future, but what they can do with their cash hoard. Emily, let me know if I answered your question. And if I need to go at it again, I will. Abraham, Apple's a hardware company that are not good on services. I disagree with you. There's services, apps. Abraham is already a top S&P 50 company, making over a double-digit billions, actually. So that's a 8-digit billions worth of money. So the short answer is they definitely are a service company, and their service section is doing better than every other company except for 50 that are in the top S&P 500, including themselves. Emily, why would they want to give away the money to investors? I guess my next question makes investors happy. I've never understood that either per se, but the one-time special dividend is a big tax write-off for them, and it's like prepaying taxes into the future, and it usually catches a big push into people where people want to get into the stock and get a profit at a long-term capital gains rate, even if they're only in it for a month or 3 months. So that's something just to keep in mind. I'm going to go back to Abraham. We agree to disagree. Abraham, their services sector, which is just their services, so to speak, $12 billion last year. Yes, the bulk of their money comes from an outdated iPhone. 48% of their business is the iPhone, something ridiculous like that. But they have a services section or division of their company that's a top 50 S&P already. That's literally going to make $80 billion this coming year. And not only that, it's going to have $80 billion that has a 5% cost associated to it. it'll very easily, that division will be the most profitable services company ever created in America, which is unbelievable. Emily, will stock fall though after the dividend payout because they have less cash? Not because they have less cash, but for those people that were in it for the short term, basically you're asking, will you see a big spike? Most definitely. Good time to have maybe some puts in place, but you'll see an adjustment on options as well. But yes, you'll see a big spike, and then most likely you will see a big sell-off in the company. It is artificially, again, it's them creating a tax bonus, so to speak. But my goodness, aren't they like the fourth or fifth biggest country in the world by way of GDP and cash on hand? I don't know what else they could do. I mean, why not make people happy? Why not artificially inflate and push your stocks up more by having a cash hoard and using it for something productive? But yes, after any dividend, you usually see a sell-off or people are going in for a short term. It's funny though, because sometimes those people don't ever make money. They actually lose more on the stock than they gain on the dividend. Okay, any other questions for today? If not, I appreciate having you. Here we go. On Visa, check tariffs. Their target is 99, but I don't know how good they predict. Yeah, Trey Fitz. I'm going to point this out. I don't spend a lot of time on target pricing. And the problem with Trefitz or whatever it is, they haven't taken into consideration, there it is, they haven't taken into consideration that they just bought for $13 billion or $16 billion their Visa Europe back, which in all intents and purposes, they have doubled their earnings potential. So, yeah, I don't ever spend a lot of time on target numbers. I work the PE ratio against future. But with that said, boy, my people just got called out with some cost basis down to 26 on the high side in the low 50s. That we did a great job. But yes, I will check it out. All right, guys. Hey, appreciate you being here today. Thank you, Abraham, for your comments. Greatly appreciated as always. Same thing with Emily. Same thing with everyone tonight. Guys, have a wonderful evening. I am off. Look forward to seeing you next week. And I'll get some more good information to get off to you. You guys take care. I'll probably be talking next week about earnings and positions I'm prepared for. Have a great weekend, and I look forward to seeing you next week. Bye-bye.